welcome to Alpha Uncovered. This is your backstage pass into the minds of breakout asset managers and allocators who discover them. My name's Alvin Fan, CEO of OPIM. Welcome back. This is a show from an institutional vantage point. We open the door for investors of all levels to see how real alpha is sourced, tested, and scaled. Today, we're joined by Emanuel Balarie, a good friend of ours here at OP, managing director at RQSI and co-founder of FundSeeder. Emanuel collaborated with Jack Schwager, who's also the author of legendary Market Wizard series, to build FundSeeder, a platform that connects high-performing traders with institutional allocators through verified track records and transparency. Emanuel, good to see you.
Alvin, always a pleasure to see you and to talk shop with you.
How's that intro? Was that accurate?
It was accurate. It was great. Beyond the managing director, the title is senior VP, but you know. It was good.
So how are things over at FundSeeder? And I guess just for the audience to know, we met, 10 years ago? Maybe almost 10 years ago.
Yeah.
We met almost 10 years ago. We took note that you and Jack were in Shanghai on a road trip, and we found that you were building this platform, FundSeeder, which was an online, and still is an online, a marriage, I would say, between risk metrics, performance metrics, and emerging manager discovery, right? So traders who want to know how well they do and want to get discovered would load up their track records or connect their brokerage accounts to this metric system, and they'd be able to see, using institutional metrics, not just Sharp, but drawdown management and all these bells and whistles that we could see in a dashboard. And that would, on the back end, filter into a system that would score them. And then any institutional investors who are interested could look at the performance, potentially allocate. And that was, almost 10 years ago. Fast forward now, you're now working with RQSI. You're running a fund-to-fund. Why don't you give us an update, like where you're at now?
Yeah, absolutely. We met. The vision for FundSeeder was this idea that some of the world's best traders, best emerging managers were out there, perhaps not in the big Wall Street hubs or Main Street. And how can we create this technology platform by providing them the analytics you mentioned to really source and then see them and then allocate capital to the ones we believed had the opportunity to grow. And that was our vision. I think Jack and I were really early. This is pre-Reddit, we talked about pre-COVID, and that was kind of the vision for us to find the talent, and we found the talent. What we found along the way, Alvin, was it's one thing to find talent, but then how do you transition them, and how do you actually create and provide an institutional infrastructure and help them raise capital and make sure they're properly registered, and that's really the partnership that RQSI has brought to the table. Neil Ramsey was the founder of RQSI, was an early seeder. So he's seeded over 20 managers that have gone on to manage over $20 billion in assets. He understands what it looks like not only to find someone who has the talent, but also, hey, they might need a little bit of coaching or a little bit of help along the way to scale. So it's been a great partnership. It's exactly what we need and what we've needed to grow the FundSeeder story.
What's really interesting about this story is that it started off as, and still is, a very technology-driven platform, right? The iteration that you have now, it's still in an online format. Traders can still log in and tap into that infrastructure. What does the transition look like for some of these guys? So let's say we find a trader. I guess maybe the first question is, at what point do you reach out to them, right? For us, we look at very basics, and well, not basic, didn't used to be basic, things like Sharp analysis, Sortinos. What else are you looking at besides metrics before you reach out to them and be like, okay, you know what? We need to bring this guy to the next level. So that's question one. And then question two is, do they want to come out? Because some of them are running good money, right?
Yeah, that's a good point. If I could just take it one step back, the way we see the world is it's almost like a funnel of us trying to find and source talent. So even when Jack and I first started FundSeeder, and remember, we had these discussions in Hong Kong and Shanghai, we always believed that only the top 1% were really even good enough to be looked at, right?
And they didn't have to be in finance either. They could come from any background.
That's right. So we don't, it could be, you don't have, you could be an engineer, you could be someone who, I mean, in one of Jack's recent book on the known market wizards, there was a trader who he features who used to be a former doorman at a hotel, and his risk adjusted numbers are unbelievable over 10 years. So, that's an example. And actually, Jack's profiles of a lot of his market wizards, they're varied in terms of their careers and how they got started. But we see it as a funnel, Alvin, and we're saying, look, why don't you just sign up to FundSeeder? You could be wherever you're at in your life cycle as a trader. You could be someone who's just starting to learn to trade and you want to create a track record. You could be more involved. You might have a little emerging manager fund, or wherever you're at, just sign up. We're going to provide you with these analytics, these metrics. You can also then see how you compare against your peers. And this was a huge thing. So we have a leaderboard, and I think a lot of traders are like they're in a silo, right? They're trading at home. They might have their Bloomberg terminal. They're just paying attention to an index or maybe some report that comes out of how the larger multi-managers have performed, but they really don't know how they stack up against their peer network. And so you come into FundSeeder, you see the analytics, you see where you stack up against your FundSeeder. And then from our side of the table, we now have that first filter of seeing quantitatively, okay, this trader or this money manager, these are his metrics. And that's just the first filter to your point. The second is then we have the qualitative conversation. And this is the things that Neil does a really good job. Jack obviously has experience. I've had the experience. It's one thing if you have numbers and maybe you got lucky. Like, do you actually have edge? What's your story? Can you articulate it properly? Do you manage risk well? Are you evolved from a perspective of portfolio management? And that is almost, I mean, you know this, Alvin, that's almost like even more important than the first filter on the quantitative side, right? And then once we see that they have what we think potentially the makeups for success, then we're willing to give them first capital. And that's what we're doing at RQSI. We're willing to give them first capital, helping them along the way, and then helping them grow to the next phase of like distribution and raising outside assets.
How long does that process take? Because when we introduce emerging managers, and this is a later stage where they're already running a fund or they've just started up running a fund, and we introduce early stage cornerstone investors or even seed investors, they usually want to look at least a year of track record, depending on the type of investor they are. If it's a quantitative manager, it might be a bit shorter because they could see more data points. If it's a buy and hold type of strategy, it could take a couple of years. So when the team comes in and has this interview, how much data are you looking at by that point? And
that's a good point. I think that's one of the beauty of our technology platform. So the traditional model, you might have an account somewhere and you're sending your daily data for evaluation, and you might have some statements, but you might not really know if it's verified, and there's a lot of friction there. So for FundSeeder, if you're a trader at Interactive Brokers and you've been at Interactive Brokers for 3 years, 4 years, and you link your account, we get that 3 to 4 years of track record. So we're able to see on a daily data basis what you've done for 3 to 4 years. And so that accelerates and gives us that greater confidence of this trader has skin in the game, trading their own money, and we see the data, we see the correlations, we have our own software on the back end that kind of analyzes it. And so it accelerates that comfort level. So that's the first point. The second point, again, given the history of the seeding history of Neil Ramsey at RQSI, I think we're much more quickly to make an allocation because we're not looking for that institutional infrastructure of a trader. We're interested more in what are his returns. And then when we're speaking to them, is he properly articulating a strategy? Does he know what he's doing? Is there edge? Do we think he has edge? And then also when we allocate, we're putting in that first allocation and that, that first sort of investment, but also cognizant of watching and observing real time in the process.
You've seen so many of these traders, probably interviewed a lot of them as much as any of us in the allocator space. What are you noticing? Are you noticing any trends or changes in the backgrounds of these traders? And number two, the type of strategies that are coming out? Or is it sort of derivatives of what we've always seen, right? In the same buckets, equity long short or arbitrage, or what are you noticing in this new generation of talent?
I think, even though there's a new generation of talent, Alvin, it still comes down to the question of, do we believe that this trader has edge? However, they're able to define it, right? And there are some of the profiles of traders we've seen recently. One of them was an ex-poker player who then developed a quantitative system to trade the markets. Another one is a dentist who's really has been trading his own money. I mean, is really passionate about the markets, has made the mistakes with sort of the signs of any good trader, which is like you had a big blow up early, you've lost your money. Jack talks a lot about this in his books, and has put together a systematic strategy that has done quite well. And so they're really from all over, from the profile of where they're from and what they're doing, they're from all over. But I think that a new trend that I'm seeing is this idea of the hunger to start a business and to actually create and manage other people's capital and money, right? Versus just trading for themselves, making money and being happy with it. They do have a little bit more of a business acumen associated with it, which I think is important for scale.
So you mean they're hungrier to build their business than, say, the previous generation? The previous generation was, I guess, well, this is a very entrepreneurial generation, I would say.
Yeah.
When
Yeah.
right, they want to build something. I guess in the whole streamer generation that we have, setting up business today, quite frankly, is arguably a lot easier than it was many years ago. I get asked all the time, right, Alvin, they go, it must be more expensive to start up a business now. It must be harder. Actually, now that I think about it, there are a lot of ways that you can start an asset management business in a far more cost-effective way, right? Like, I think about fund structures, which are really expensive. So even when we look at a manager, he might be generating 20% return. But if you take out all of the costs associated with structuring a company, a fund company, the administration costs, the brokerage fees, the drag could be like 4 or 5% in some cases, right? So of your 20%, you knock off another 5, that's 15%. Then you have distribution fees, that's another 1.5%. Like management and then performance fees, that's another 2.5% or 4%. So you might take home for the investor is maybe about 11 out of the 20, right? And so when we look at new structures today, like SMAs, right? SMAs are really popular now, the segregated managed accounts, where institutional investors will say, look, I don't want the fund costs. I don't want the liquidity restrictions of a fund either. Just open up a brokerage account. And this could be like a Morgan Stanley, or it could be like an IB, where they let me just open the account. I want you to run it. I'll pay you the fees. And let's just have a very basic term sheet and a contract, right? That's a business. Right? That's a business. And then you have these copy trading platforms now, right? A lot of brokers open up copy trading platforms where you trade and then you run it through the copy trading. Investors can come copy your trades. And that's kind of like a gray area because you're not actually managing, you're not custodying other people's money. They're simply copying the trades you do. And there's a little bit of slippage, but generally that's also a model and you can generate 1 in 10 on that.
Yeah, no, that's right. And I talk about they're hungry. I want to make sure I'm clear here to like build the business, right? Like in other words, they want to compete and build something of substance. But on the flip side of the coin, they have no idea what it takes to build that business. They don't understand what you mentioned, the infrastructure, the cost is. So it's when they start and they launch, or they quickly get distracted. They quickly are focusing so much more time on the business side of it than on the trading side. And that's just a recipe of failure and a disaster. And so that's one of the things that we're trying to do at FundSeeder and RQSI is like we're finding the talented traders. And I know you do that as well with OP in terms of what you're offering, providing these plug and play infrastructure so that they can trade, because they're not business people, even though they want to build a business. They're really traders or money managers, and that's their skill set.
Yeah, so what you're saying is it's different. It's not like making like a side gig where you're generating a little bit of income by helping other people. This is about building a fully fledged, either a fund or an asset management program, right? Which is super expensive, like compliance officers, right?
Yeah, because we were talking about this where we're living in a day and age, you're talking about what's changed, and you've had these ideas that have become unicorns and billion-dollar companies. Like you've had people who purchased Bitcoin and have become, they're worth hundreds of millions of dollars, right? Like there's this perception that it's not impossible if I'm trading $1 million today to manage $1 billion in 3 to 5 years, because that's what they're saying. But the harder road is the other nuances that come into place, like the infrastructure. Can you scale? Have you thought about taking size? And a lot of them, I really have no clue until they get to that point. They're just almost like very idealistic in their pursuit. Does that make sense?
Yeah. Yeah. Do you find that there is a commonality for those traders who do have an edge besides the entrepreneurial spirit?
It's a good question. I think a commonality is they're very stubborn, like in terms of they're very focused and they really believe in themselves. And so I remember talking once to a market wizards that we were trying to convince to come in and take our allocation. And they were so focused on, I mean, literally splitting pennies in terms of the commission on the commission rates, right, from the transactional side, but they wouldn't move off it, right? I observed it, and my own perception was like, this is irrelevant. It's literally pennies, but they were like really stubborn on it, like, no, this is important to me. And throughout the process, I couldn't sway him. I couldn't really persuade him on certain things, and I actually respected that, right? Because when you're trading in the market, the commonality is you really have to believe in yourself. It's often when everybody else is doing something totally different, but at the end of the day, you're betting on yourself. So that commonality of almost like stubbornness and not caring what others and opinions of others is something that I've seen.
But surely there's a limit, right? Because in the world of business, there's always compromise and negotiations, right? Right. You can't.
Of course. Of course. And so you can't be fully stubborn. And then there is that part where you're stubborn, but then you also are open to feedback. And so that same person that I mentioned, he's always trying to learn. I mean, he's always trying to like, can I get feedback on certain things? That's why they're few and far between, right? The really, really good traders are both learners and they're both very stubborn in some of their approaches. I mean, what's your opinion?
Yeah, I think I have a slightly different take. I find the stubbornness itself is common for pretty much anyone who walks into our doors. They all have a very, very, very strong belief in what they do, but sometimes that bleeds into almost to a fault sometimes, because you need to educate them on certain variables that matter, which have to do with the trading performance itself, and then other variables that may not be material. And that discussion process can often come at the expense of ego. And so we do find ourselves needing to build that trust in order to dismantle some of that, so that there's more give and take, because there's an overvaluation sometimes of the edge itself to the point where it supersedes everything. Where, for example, they may say, look, this is where my alpha is. Anything else is trivial from their perspective. But as you know, running a business, it's more than just portfolio management, right? There is
correct and yeah,
infrastructure and the cost of that, and they devalue everything else in favor of the alpha. And while it is the highest priority in a business, it's more than just the dish that's cooked, right? It's also about the cashier. It's also about the location. It's also about how you hire and how you position yourself. And a lot of the very, very talented managers may end up hurting their prospects by not appreciating the other aspects of the business itself. I think that's the toughest part, is working with them to learn more about the business dynamics as part of the alpha generation, as part of the cost. And it's almost offensive to them that you have commission fees at a certain rate. It's offensive to them that you even have compliance costs at all. And so that process is probably the most expensive part, is the education itself.
Yep. No, I agree. That's another sort of filter. So we find these 1%, I think a common, again, characteristics, they're stubborn they hold on to their outlook in terms of trading. But then the amount that are able to transition to actually build businesses and to be successful is even less. And in that situation, they have to be open to feedback and be open to coaching. And that's the idea of the accelerator. I know we could chat about that whenever, but that's exactly the whole point behind it.
Yeah, well, let's talk about the accelerator. Yeah, like how is the accelerator? Is this like a second phase on top of the FundSeeder platform itself?
The concept is that it's exactly what we've been talking about, right? Like the FundSeeder database is we're trying to find the top 1% of trading talent. But to transition and accelerate to actually become a business, manage money, have the proper infrastructure, tell the proper story, know how to deal with investors and raise capital. It's almost like a different ballgame altogether. And so the idea behind an accelerator is a 3-month program, almost like a casting call of American Idol, or what do they have in Asia? What's the equivalent in Asia?
Well, we have the same brands that you do, except they're
Okay.
franchise.
Okay.
They're
American
basically
Idol
the
Hong
best
Kong,
versions of us.
right? Like the
China's
casting
passport.
call. Yeah, just apply. And then there's a pretty extensive application asking you questions like what's your edge? What's your background? Markets traded. Obviously, we look at your performance. And then we select the top 1% where they enter this 3-month program where we have a group of advisors. Appreciate you being one of those advisors, Alvin, that can sit down and talk to them and help them on the business side, on the risk management side, on the positioning side, wherever they're at in their life cycle. And I think the ones that are going to be in it are going to be open to that feedback, which is key and critical. And so they're going to go through a 3-month program where they're listening to feedback. Obviously, if they got accepted, the numbers and what we think in their edge kind of fits and it's good, but we want to help them accelerate their business in any way we can. And then it's going to culminate at the end of January at the Uncorrelated Alts Conference at a demo day in front of other investors after they've gone through several advisors, talking to them, coaching them. And so it's an accelerated path. It is what it is, kind of the idea behind it.
So at the end of the acceleration program, are you lining them up in front of institutional or with early stage investors? Is that the idea?
Yeah, that's the idea. If you think about Y Combinator or these accelerators that have minted, so these bigger Starbucks companies like Airbnb or Coinbase, they had founders who had this brilliant idea, some early traction, and they applied. And then the Silicon Valley group brought them in a bunch of different advisors, opened up their relationships, and helped them scale, gave them advice like, listen, you're going on this path, but how about this pivot? We see more opportunities here. It's a very similar model, right? Where instead of having a trader or an early money manager, as an example, Alvin, spend a year going to these conferences to raise capital and spending $100,000 and then realizing is a waste of money. There's different pathways, right? Like we're helping them out.
Yeah, no, I think it's great. I think this is a great program. I'm really looking forward to it. January. Is it in New York or is it
Miami?
Miami? Okay, excellent. Yeah, everyone's moved out to Miami. All of our allocator friends, since COVID, a lot of allocators have moved out to Miami. Excellent. So I'll see you there. We talked about technology earlier. I'm just going to pivot here to AI because we keep skirting around it. So I'm going to ask the elephant in the room question.